Welcome back, traders. This is the Options Trader Lounge, and in today's video, we are going to be discussing the fallout that we are seeing from this recent run-up in the stock market. The market has pulled back on all major indices, and the performance is not looking good. Looking at the S&P 500 year to date, from the first trading day on Tuesday, we are down 1% on the S&P 500. Looking at the triple Qs, the tech heavy ETF, year to date, we are down 2.33%. And then on the IWM, we are doing really bad here. It's a total collapse on this particular ETF. Small caps are being destroyed. And rightfully so, given that there's so many zombie companies that are out there, down almost 3%, putting in a downtick of negative 2.75% year to date. So things are not looking good across the board. Now, what does this mean for this upcoming year? Well, you as traders, and what I've been doing from the very beginning, was really following the trend. Now, as we saw this massive run up on the market, what we saw prior to the end of this year was intraday sell-off. We saw weakness come into the market where the market would just suddenly rip down, and you can see that if we move into the hourly chart. Within the past 20 days, you saw intraday sell-offs, like one right here that happened on the 20th of December, and we saw another sell-off here in the 22nd, and then a big sell-off that started this ripple effect throughout this week on the 29th of December. And now we are down, sitting at 467.85 at the close on Thursday on the S&P 500. So in this video, we're going to be discussing the many things that I'm going to be watching out for going into this this final trading day of the week on Friday, with the major non-farm payroll report to be reported on Friday morning. So without further ado, let's get right into it. Welcome to the Options Trader Lounge, where we talk about generating income and growing your wealth within the US stock market using options. Thank you all for tuning in. Get yourself a drink, sit back and relax, because we have a lot to talk about. Now, if you haven't already done so, please go ahead and subscribe to this channel. Please leave a like down below. And if you have any comments to say about what you think is gonna play out for this first quarter of 2024, please leave a comment down below. It would be great to have a good discussion, because this is the discussion section is where we would find the most value, as we can get many traders' opinions on what they are looking forward to for this upcoming quarter, as we kick off 2024. So please go ahead and leave a comment down below, and that way we can get this conversation going. Now, the S&P 500 has seen those intraday sell-offs within December, towards the end of December, and now we are in a downtrend. And what I like to always bring up when it comes to trading is that it is very important to not fight the trend. Now, we can see that we've been in this uptrend that started back here in October, but before that we were in a complete downtrend. And this uptrend has been overextended. It was a breakthrough this long period here that started back here in July and ended in October. And now we have broken through this uptrend. And now the question is, how far will this downtrend continue? Now we can see, this is the daily chart now, we can see that the momentum of this prior uptrend that started back in October started to fizzle out. Now, this is the momentum indicator, the MACD, which is something that I follow closely to determine how price momentum is playing out in the market. And you could see that this was fizzling out, and now we're finally seeing this fallout of this momentum here in the S&P 500, and you're seeing the same reaction on the triple Qs, the Dow Jones, and in the IWM. With the IWM, that is being completely destroyed at this moment, being down almost 3% from the beginning of the year, quite frankly. Now, the S&P 500, which is more balanced, right? It's more balanced than the tech-heavy Nasdaq, is in a fallout stage. But there are levels of support that we can start to watch to see how the market is playing out in terms of finding support to possibly find a balance higher, and then maybe a continuation down lower until we can get this momentum to be taken out of the market to be closer towards zero before we can possibly move up higher. Now, if we're looking at levels of support, I personally think that an area where the market could trade down to finally uh, get out all of this excitement in buying to be fizzled out is probably right down around the 460 level. Now that's quite a way down from where it is now. If we're looking at 460, that's another 1.42% away. And we could expect to see that within the next few trading days, depending on what kind of news we will get from this upcoming non-farm payroll report on Friday. Now, there's there's many things to be watching out for the non-farm payroll report that's going to be released on Friday. We would want to see um, how the job market is performing. This past weekend in December was mainly about trying to get people back into the workforce to close out the holiday shopping season. And hopefully, on a positive note, we would want to see jobs to remain high because that means people have money in their pocket to spend. But knowing history and looking back in history, the reason why the Fed will cut rates is because they are starting to see cracks within the market. And there's, different things that the Fed will look at when determining rate cuts this upcoming turn when they're going to decide on another rate cut or the first rate cut for the year, really. They're going to want to see how data is going to be coming out on the next few economic data to determine, you know, how the market is really performing. And looking back at history, whenever they cut rates, that typically is a sign that that certain things are weakening, right? Uh, and that could lead into recession on a historical standpoint if you're looking back in history. Now, again, looking at where we're at now, it is important that we follow the trend. And right now, the trend is down. So, as a trader, whenever you're trading a downtrend, you're going to want to look for any pops in the market intraday that you could sell off of. Right now is not the time to start buying because you're going to be met by sellers that is going to keep the pressure on to the downside. you know, if we're going to look for some sort of buying opportunity, you want to see this sell off to slow down, possibly creates double bottoms in the market before it can move higher. But right now, I am focusing on selling call credit spreads. That has worked well for me. Um, and uh, we've been performing very well doing that. Now, there's a lot of reasoning that uh, if the market were to pop and it would sell off further, um, because there's a lot of trapped buyers who bought the excitement that the market was looking great, and opportunity was to just keep buying the market. But we have to always keep in mind that the market moves in fluctuation. There's buyers and sellers, and uh, whenever there's more sellers than buyers, the market moves down. And whenever we have an explosive move to the upside, what does that allow us sellers have the opportunity to do? It allows us to have the liquidity to begin selling into the move. And so now we are finally seeing that breakdown in the market where the market is going to fall out from the top. So that is what we have here for the overall trend that we are seeing in the market. Another thing that we want to point out here is the VIX. We are starting to see the VIX pick up here. We are now sitting at 1413, and we see this momentum grind higher on the VIX, which is another telltale sign that there is more volatility that we're going to be seeing in the market, and primarily volatility to the downside, especially with what we are seeing geopolitically. Um, there's a lot of activity going on in the Red Sea. We have the war going on in Israel, and North Korea is getting involved with their Ukraine war. They're selling their munitions over off to Russia, and we are now also seeing Ukraine attack Russia within their borders. So that is another, I'm gonna say, risky place to be in the market right now, because we don't know how far Russia will retaliate with the current fatalities that they are seeing within their border. Because now it's going to be a full global war that we are seeing, and not to mention that uh, Iran is getting involved. So there's a lot of things to be watching out here. You know, the VIX could easily pop up to 16 with the right kind of catalyst. And I think the catalyst is really going to come not only from the Fed, but geopolitically. So we have to watch out for those things. So if you like this video, please go ahead and like this video. Leave a comment down below with what you expect to see play out in 2024. We'd like to get this discussion going because 2024 is, if you watch Valuetainment, which I love to watch, Patrick Bet-David always said, has been, predicting that 2024 is the year of chaos. So, I mean, there's a lot of things going on. We had that earthquake in Japan, plane crashes in Japan, and the Asia, Korea, Taiwan war going on. There's just a lot of things to be mindful of. So um, I hope you all are hedging your account appropriately as we are on this channel. And yeah, please subscribe and we'll see you on the next one.